Hi, welcome back to Finally Revealed. In this episode, I want to talk about another section of the CARES Act that was passed by Congress and signed by the President and became effective March 27, 2020 with regard to financial relief related to the coronavirus pandemic. Section 2202 pertains to distributions, which is withdrawals from retirement accounts, both employer retirement accounts under 401k and 403a, and also individual retirement accounts or IRAs, and loans from those accounts. The total amount that you can either borrow or withdraw under a distribution is $100,000 from January 1, 2020 until December 31 of 2020. So this also applies if you had a distribution or a loan that you took out before March 27. The person withdrawing the money or borrowing the money is exempt from any penalties or any repayments required in 2020, and the plan is exempt from any rule violations under the Internal Revenue Code as long as this is coronavirus related. The distributions or the loans are considered to have been made and repaid within 60 days of the distribution if it was a qualified employer plan or an individual retirement account, as long as it is repaid within 3 years of the time of the distribution. So if you withdraw money, if you're eligible, and I'll go through those rules in just a minute, if you withdraw, and you can do it one time in the total amount of $100,000, or you can have multiple withdrawals or borrowing from these accounts to a total amount, an aggregate amount in 2020 that totals up to $100,000. That's the maximum amount that you can withdraw or borrow this year to qualify to get it without any penalties and without any repayment in this calendar year. And you have 3 years to put the money back if it's a distribution, and it will be counted as if you did that within 60 days. And then I'll go through the rules on repayment of the loan in just a minute. But if you do those things, then there is no penalty, there is no tax withholding required at the time you take the money, and the plan, your employer's plan or your IRA conditions are not violated to jeopardize the tax treatment of any remaining money or the money that you put back, as long as you follow these guidelines. And when you put the money back or repay the money, as long as it's repaid into a plan or account that could have received a rollover distribution, then you're all good. The list of who is eligible and to be a person making this withdrawal or loan that is considered coronavirus related is any of these categories, and then anything else that the Secretary of the Treasury determines is eligible. Employers can rely on the employee's statement as to their eligibility under one of these categories that I'm going to read out to you. And also, if you are withdrawing from your IRA company doesn't need any documentation from you. You just make the call or do it online, whatever their procedure is for a distribution or a loan. And then also, if you're borrowing from an employer account, an employer retirement account, again, you'll fill out whatever papers and promissory note and things that they normally do, and you'll just tell them you're eligible. And here are the categories to determine whether you are eligible. Any person who is diagnosed with COVID-19 or SARS-CoV-2 by a CDC-approved test is eligible. Anyone whose spouse or legal dependent was so diagnosed. And the biggest category is those people who experience adverse financial consequences as a result of any of these things I'm going to read are eligible. And those include someone who is quarantined, someone who was furloughed from work because of the quarantine or the virus, someone who was laid off, someone who has had to work reduced hours, someone who is unable to work because of lack of childcare, someone who is unable to work because the business was closed. And if you are a business owner, your inability to work full-time due to reduced hours or closure of the business that you owned or operated. And then, like I said, any other reasons that the Secretary of the Treasurer puts out. So basically, all of those people are eligible to take advantage of these rules. So if you take a distribution, normally if you're not 59 and a half years old, you are going to have a 10% penalty added on to the amount that you report as taxed and taxable on your income tax return, which would be the whole amount. So if you took out $100,000, then the 10% penalty, you would report that you received other income of $110,000, and you would pay tax on that amount. Because they are allowing you to put the money back in 3 years rather than a normal time period of 60 days, you get to choose when you are going to repay that, and you also get to choose how much of that distribution you are going to count as income for this year and the next year, 2021, and the next year, 2022, if you take that amount of time to repay it, or if you don't repay it. Okay, so it's your choice. So talk with your tax provider next year when you're preparing your 2020 taxes so that you can do it to the best advantage financially for you. Also, these distributions are not treated as an eligible rollover for this year, and they're also not treated as an eligible distribution for this year. And what that means is then it's like these didn't happen. I mean, they did happen because you get the money and now you can repay it. But under your plan terms and under the general guidelines, these are usually one to a customer per 12 months. So they are suspending those rules. So like I said, you can take one lump sum, or you can take some now and you think that's all you're going to need, but you can come back and withdraw more anytime during the rest of the year 2020 up to a maximum amount of $100,000. And it's $100,000 maximum per employer plan or per account. Now, if you want to take out a loan from your employer, your 401k plan or whatever, normally those are limited to $50,000 loans or 50% of whatever your vested balance is if you don't have $100,000. So if you had $60,000 in there, you could borrow $30. If you had more, you could borrow up to $50. Those have been increased up to $100,000 also. And these loans and the period for the rules on the loans goes from 180 days from March 27, 2020. For repayment of these loans, you only have to pay interest in 2020. And if you already had a loan outstanding at the time the law was enacted, it also applies to those loans. So you can defer payments on those other outstanding loans that you already had. So if you already had a loan from a 401k and your payment was due sometime from March 27 until the end of the year, that payment date can be pushed out a year, but you have to pay your interest. And then any later repayment is going to track from the extended payment that was due this year that's now being pushed out. So talk with your plan administrator so that you understand the exact due dates. And because these payments are now being pushed out and you might have already had a loan and maybe you're coming up on your 5-year repayment, those 5-year repayment rules have been suspended because of these extensions that are allowed. So I hope that was helpful to you. It gives you another source of income. You might have received your advanced tax refund. You might have received a PPP loan, either you as the business owner, or maybe you received payment because your boss or your company received a PPP loan. And maybe you're back to work, maybe you're not back to work. You might have still reduced hours. Things are still in flux. This is another opportunity for you to use your money to help you and to not face penalties that might dissuade you from doing this, 10% penalty plus paying income tax on it. You get to choose what year this is going to be taxed in, and you get to choose how you're going to repay it. You have 3 years from the date of the first distribution that you take. So if you have taken one already, you might have be ahead of the game and now you're just looking at this video to catch up. But if you took one right away after March 27 and maybe you took some money and maybe you're going to take some more because you didn't take a total of 100,000, track back to be safe from the date that you first received a distribution, so that you're within the 3 years. Put it on your calendar so that you know, and make a note when you go to do your taxes for 2020 to talk to your accountant or your tax preparer, because you can take, if you took $100,000, you can do a third, a third, a third. You could do $20,000 this year and then $40,000 and $40,000 the next 2 years as additional income on your taxes. Also, while you might want to allocate some of that as taxable in this year, remember you're going to be if you are going to repay it, and you do repay it within the 3 years, you need to make another note to go back and receive a credit, because it's tax-free if you repay it. So there's a couple of different things on your taxes. When you're going to count it as taxable, if you do this year or next year or the 3rd year, when you're going to repay it, and when you actually do repay it, if it's a distribution. You don't have to repay it under these rules, but you can, and if you do, then it's not taxable at all. So talk to your tax provider. If you think you'll be able to repay it next year, then you might not want to count any of it as taxable in 2020 and just wait until it's 2021, because then you can show that you received it and you repaid it, and there should be no tax liability. And regardless, there is no extra penalty, the 10% penalty for early distribution. So I hope this was helpful. If it was, give me a thumbs up. Leave any comments or questions below. Share this with someone who might be struggling financially and not realize that there's this added benefit that they can take advantage of. Also, if you have a 401k loan or you know someone who does and they're a little bit nervous about it, they can suspend their regular payments and just make their interest payment. That will give them some relief, and then these rules allow them to stretch out the payments. Subscribe to see the other videos and come back and see me next time. Thanks for watching.